In this video, I have one of the best beginner-friendly trading strategies for you. We don't use any tools, we only use pure price action, no indicators. It works across all the time frame, and I will show you how to do a proper multi-time frame analysis at the same time. So let's get into the video. We always want to start our price analysis on the higher time frame because the higher time frame helps us understand, should we trade long, should we trade short, where are we in the bigger picture, and are there any important key levels right at the price. And for this beginner-friendly trading strategy, I want to use one of the simplest but very effective concept, and we're going to use round numbers. Round numbers are numbers and price levels such as in the case of Bitcoin, 70,000, 60,000, 50,000, 40,000, 30, 20, and so on. And you can very often see very precise and very strong price reactions at those levels. And this is not unique to crypto. And we can pull up any market. Now we are on a Forex pair, and here you see round numbers such as 1.0, 0.95, 0.9, 0.85, 0.8. And here as well, you see often very strong reactions at those levels and or around those levels. And this is a great foundation to start building a very simple yet very effective trading strategy around those concepts. A lot of traders are using round numbers for their trading, for stop loss placement, for target placement, for breakout trading, and for the overall bigger picture. And this is why you will see often such precise and very strong reactions at or around those levels. So let me show you how to find some really interesting trading opportunities using round numbers. Here we are still on the daily time frame, and here we are very close to one of the biggest round numbers in Forex, 1.0 parity. And this is a level that a lot of traders are watching. The market is in a strong uptrend, and you can be very certain that a lot of traders have their targets at or around those areas. Why not right at one of those parity levels? Because if you think that a lot of traders have their target at 1.0, you will probably most likely have your target a little bit ahead of the level, so that if the price turns ahead of it, then you will not left behind and you will still be able to exit your trade for a nice profit. So this is why you will often see those rallying effects around those round numbers, especially the very big round numbers. So now you can see we are coming here from a very strong uptrend, and then we see deceleration. We have two inside candles. First a red, strongly bearish inside candle, and then here we have more or less of a doji, a rejection candle at the top. This is a great signal that we should be going to a lower time frame and look for trading opportunities away from the round number. Let's do that, and we can go to any lower time frame, 15 minute, 5 minute, but we can also go to just the 1 hour time frame. And here we want to look for the structure, and what do we see? We see that the market put in here kind of a double top. Then we have a swing wave here to the downside. This is a swing low that we are dealing with. And what we want to identify in the case of an uptrend, we want to identify highs and lows. So the market is making higher highs here, and we are making higher lows here at the downside. We don't want to trade short as long as the market is making higher highs and higher lows. So for that, we simply can come up with a trading plan of waiting for the market to clear such a level. And once we break this level, what are we doing? We are making lower lows. Some traders will refer to this as a change of structure or a trend change. And this is a very, very important signal. When the market is changing its high and low structure, then often you'll see the overall trend also shift. You see shortly after the market is trying a third time. Now we're having a triple top here, and very interesting, at the triple top we see a strong sequence of selling. This is already a good indication that there's a lot of selling interest, probably a lot of long position traders have their stops here. So that's why you see a big market shift here already, but we want to wait for the market to clear the level, right? So the market is clearing the level, we are breaking into a new low here, and the market for the first time ever is making a lower low, and it is not able to make a higher high. This is a strong bearish signal, and a lot of traders will use that for their trend following trading away from the round number and then try to capture short trades. Just a few candles later, you can very nicely see how the market is then pulling into the next round number, 0.98. So you can use the 0.98 or any round number then as targets. You can either structure your targets, take first, second, third targets. You can also decide to move your stop loss. But this is a very simple, as you can see, yet very effective way. However, I want to highlight the point that you don't just blindly trade a round number. Just because the market is at a round number, it doesn't mean you should automatically jump into a trade. First, we need to wait at the higher time frame to see clear signs that the market is slowing down or rejecting the level. And then we want to go to the lower time frame and want to find patterns. Patterns can be triple tops, double tops, head and shoulders, wedges, triangles, and anything that allows us to come up with objective trading plans. This is the key to trading beginner-friendly trading strategies. You want to remove a lot of subjectivity and you want to keep it as objective as you can. If you like this way of trading and if you're interested in learning more trading strategies similar to that, and then also progressing into more intermediate and advanced trading concept, then take a look at my new trading program, which is called the Tracademy. This is your ultimate all-in-one trading education program. It is the trading program I wish I had when I started trading myself over 17 years ago. It includes a brand new trading course with over 80 videos, and I update the course and the lessons almost every week. It includes mentoring, and you will always get mentored by me personally. I'm not using other teachers or other trading mentors. You are always interacting with me. You can ask me your questions. And also in my weekly live webinars, you can join me, see what I'm like to trade. You can ask me questions. I review your trades and provide personalized feedback. And finally, you also become part of a great traders community from all around the world. And then trading becomes way more fun when everyone is motivated and pushing into the same direction. Everything that I've learned trading over 17 years has gone into the creation of the Tracademy. I have recorded completely new trading strategies. Nothing in the Tracademy I've shared anywhere else before. It's 100% unique and new videos, new trading strategies for all the time frames, whether you want to be a swing trader, a day trader. This is the trading program for you. And this also works for Forex, commodities, cryptos, indices, and we even have stock traders in our program. So if you're interested, check the link underneath the video. There's also the full course outline with all 8 modules, and you get a breakdown of what is included in all of those modules. There's also a current special, so don't miss this unique opportunity. And now back to the video. We are back on our higher time frame, the daily time frame, and we're seeing that the price has moved into another round number, 0.9000. And we are seeing that the price is slowing down. We're seeing a very interesting candle formation with wicks pointing to the upside. This is often foreshadowing more selling to come if it occurs in the right context. So wicks can tell us actually a lot. I made some videos on my YouTube channel about understanding wicks in different situations. And this is a great deceleration signal. And at that point, we really are interested in going to a lower time frame and trying to find trading opportunities away from the round number. And we're doing that by going to the 5-minute, 15-minute, 1 hour. You can really choose any time frame that you are feeling comfortable with. So this is the lower time frame situation at the point of the 2 candles. What do we see here? We can probably connect the lows. So we are already seeing some bullish pressure building. Whenever you see a bullish or upward sloping trend line, that indicates some bullishness in the market. Then to the upside, what do we see? We have a few highs that we can try to work with. Nothing really stands out. But what we are seeing is that the market is already trying here to make higher highs, right? We are having a higher high here, a higher high here, and we're making higher lows. So we are already seeing a micro structure shift on the lower time frames as well. What we can do now is that we are trading a bullish breakout. We have the confirmation of the higher time frame that we are seeing deceleration. And then if we get a good breakout out of this high, we can decide to trade a long entry. If you're more of a breakout trader, what you also could be doing is trade a break and retest and then get into a long on the retest. That's up to you, and it depends on your personal preferences what you prefer to trade. So let's see what the market is doing here. We're getting actually a very nice price structure now, and I think this has improved the setup overall, because now we have a very clear resistance level that we can work with. 2 touch points on this level, validate this level even further. So if we get now a breakout above this validated resistance level, that's even a better bullish signal. So this is great news for our setup and for our trading plan. The breakout has happened now. Here you can see the market continue to make higher lows, which is another great bullish signal. We have broken the resistance level. How we have broken the resistance level is also very important. And here you can see we are breaking the resistance level with a very strong breakout candle. And then this is then often where breakout traders get in and then trade to the upside. You can trade from round number to round number. We are already here very close to 0.905, but 0.91 is a bigger round number. The more zeros a round number has, typically, not always, there's always exception to the rules, but typically you will see that the stronger reaction is. The price has been struggling a little bit here during the range, but eventually we made it to 0.91. And now the price made it to the next target, so now we are at 0.915, and the price has given us a very interesting rejection. You can also see how the market is behaving around those round numbers. We broke above it, retested it as support now. It held as support here once again, and now we are seeing a small rejection. So very overall interesting trade study for a trend following trading approach, starting on a higher time frame and then analyzing lower time frame price patterns and trading the trend.